Welcome back. Jared Blikre has a dive into the early market action for us down at the New York Stock Exchange. Jared.
That's right, kind of a mixed board that I'm looking at right now. NASDAQ in the leadership position. But I'm looking at the S&P 500 on the Wi-Fi Interactive, and we are right up against previous resistance here. That led to a 4,600, led to us these lows that we see over here. So we're still in a short-term uptrend, but I'm getting a little bit more cautious as we head into the end of the month for a couple of different reasons. We're seeing volatility, the VIX kind of come back to potential support levels. Also, we have month-end pension fund rebalancing to the tune, and this is a very estimated number, $22 billion. So what happens when you have big moves in equities and bonds is pensions funds have to rebalance and they tend to switch. So if you have equities that are going up precipitously during the month, you'll tend to see those get sold at the month end, and then bond yields, if they're going up, that means bonds are getting sold. Suddenly at the end of the month, they'll be bought, which means yields probably at a short-term, at least interim peak. Now, this is only into the end of the month, but I do want to point everybody's attention to something that's going on in the currency markets because we're seeing volatility everywhere on the rise. Now, this is a cross, a foreign currency cross we don't look at that often. This is a Japanese yen versus a Chinese yuan, and we can see it's down 15%. This means that the Japanese yen is weakening by this amount and the Chinese yuan is strengthening. So this is a long-term trend in place. And if you go to a max chart here, and forgive the scalings, I just want to point out that the last time we were close to these levels was August of 2018 or 2015, and that was when the Chinese government devalued the currency by 3%, caused all kinds of shockwaves throughout the system, and the Fed eventually postponed its rate hiking cycle because of this. So big term implications that we're talking about here.
Yeah, that's a really great point. We don't always pay attention to your point about foreign currencies, but we should, particularly sometimes when there are those bigger implications and can cause a ripple effect. Let's talk about a different kind of currency, cryptocurrencies, because we are continuing to see a rebound in the likes of Bitcoin, Jared.
Yes, and it was a productive weekend. I've been talking about the 45,000 level, how important that was to recapture, and that is what happened over the weekend. So we still need to spend some time above it, maybe come back down to it as prior support, but you can see we got liftoff Sunday, so interesting to see that happen. Now here's a one-year chart. I want to do the technicals on a longer-term basis. So here are the record highs, close to 70,000, came off, and we've been consolidating here, and we were just looking for that breakout. You don't even need a catalyst sometimes. It looks like there was the market was just primed for that. So now we need to see 45,000 hold, can have a little bit of a dip, but should look something like this. And if those price targets of 100,000 ever had any meaning, I think they're going to have a little bit more meaning now, one step at a time. Now, Bitcoin is also known for false breaks to the upside and the downside, so this could be a false break up. So if we were to get back down in this and start heading into below 40,000 to 35,000, that would be another false break to the upside that would trap new longs and probably set the stage for a more pronounced decline.
Jared, that looks like the unflexed bicep formation there.
That's a new one, Brian. Every day, every day.
What I'm here for. Jared Blikre, thanks so much.